Welcome to another episode of the PPSS Success Show. My name is Fong. I'm an entrepreneur, business strategist, real estate investor, speaker, and also a best-selling author. And every single day, I help others unlock potential to guide them to succeed. Today on the show, we have another fascinating guest. On the show, we interview celebrities, entrepreneurs, business CEOs, multimillionaires, real estate investors, speakers, athletes, and artists to find out their path to success, how they're able to overcome challenges and adversity, and of course, their keys to success. And today's guest is somebody who has been helping so many people achieve great success in real estate, helping them make better decisions, helping them make better deals, helping them make more profitable deals. And it's very, very important because real estate is something that people really are interested in, but they're sometimes making the wrong decisions, and sometimes that's why they fail. And this person is somebody who's helping so many people succeed in real estate because of what he does. When we had a conversation, I was blown away by what he's creating right now, which is this amazing software that lets people make better decisions, make more profitable decisions, and make more confident decisions when it comes to real estate. Whether you are starting off in real estate or some seasoned veteran in real estate, this is going to help you make faster decisions and better decisions. He has this knack of understanding real estate market trends and simplifying those complex concepts so that it makes real estate investing accessible to everyone out there who is interested in real estate. He's able to unlock that real estate potential in everybody out there, and of course, increase that potential for people who are already in real estate. He's a person who's turning those financial analysis into a data-driven experience so that you're making smarter, more profitable, and more confident decisions when it comes to real estate investing. So please welcome founder of PropertyCast.io, expert real estate investor, and also a realtor, Mr. Jordan McGregor.
Fong, thank you so much. I love your intro, and I appreciate your kind words. You are very flattering, sir. Thank you so much. It is a pleasure to be here. I'm really excited today to chat to you. I know we had a conversation before. It was a relatively brief conversation, but there's a lot to I think to unpack in when it comes to real estate investment. And I think for a lot of people, there's a lot of white noise in the industry. I'm sure you can relate to this.
Uh-huh.
People don't know where to turn. They don't know what to do. They don't know what software to use. They really don't know how to get started. And I think it's interesting, and I don't know your experiences on this, but I do find, this market and a lot of other markets can be really predatory, where people who I think start off wanting to help will build something that isn't really delivering what the person needs, and which is knowledge, right? I mean, knowledge is power. And so that's what, I've been in real estate as an investor for over 20 years. I've been a professional realtor for 14 years, and my passion has always been in real estate investment and how to, you made a couple of points, how to pick out good deals, how to separate the wheat from the chaff, so to speak. And I think we can both agree on this. There's a lot of opportunity out there. The problem is there's a lot of junk out there as well. And, really savvy marketers can do a really good job and, perhaps sell you a false bill of goods. And I think it's important for any investor, while yes, you got to build a good team, I think you also need to have that knowledge base yourself. And that's what we're trying to do. And so, I've been doing this a long time. I've come up with a lot of different systems to help not only myself, but my clients understand real estate. And it's when I sit down with clients, oftentimes I'm, going through relatively complicated and advanced spreadsheets. And, while they're incredibly effective at compiling and breaking down the data, they're really hard to understand. And, I would spend more time trying to break down that information and show people why it's a good deal or why it's not a good deal. And I found it to be very cumbersome. And at the end of the day, I'm only one person, right? And so, sure, I can share an Excel spreadsheet, but the time that goes into teaching people how to use it, there's not enough hours in the day. And so we ended up creating a software a couple of years ago, and truthfully, it was self-serving, right? Like the software, it's, like a lot of things, its inception was to help me have an easier time showing my clients what's a good deal and what's not a good deal, whether they're a seller client or a buyer client, right? And that's how it all started. And then, from there, my clients started to use the software. They started to share the software. My user base started growing. And then it's funny, I started getting people calling me and not and I wasn't soliciting. Wasn't a tool I was using to solicit clients. I'm very particular on who I take on because I don't have a lot of time. But people were calling me wanting more features. They wanted to kind of get a better understanding of the software. They wanted to see it do different things. And I thought like, and this wasn't what I had intended, right? And I thought, well, I think there could be another, business case here to develop something that would be more widespread. And, it was funny. I was getting people calling me from Australia. I was getting people calling me from the UK, tons of people in the US. And so we said, I think there's something here. And so we started to really work on the UX and the UI to build something that was relatively robust, because I mean, there's lots of ways to invest in real estate, right? So, we wanted to try and cover off a lot of the different facets of real estate, and so we started off with what we did a lot of, which was BRRRRs, right? The buy, renovate, rent, refinance, repeat, and that really can cover off a lot of things too. And then we got into, like the buy and holds. And then we got in, so we actually just today, before I jumped on with you, we have just launched a new update to the system where we can do flips, long-term holds, and wholesaling. And so, we're trying to make it a relatively robust software, and it's been a lot of fun. It's been great, and we don't charge a lot for the software. It's very inexpensive. It's $20 a month. What we're trying to do is bring knowledge to the market so people can start making informed decisions. And it's like, I don't know how many times, I'll go through a property with a client and, it is overpriced, it's in bad shape, and it ends up going into multiple offers because I think there's really, truly a lack of knowledge in the market. And people think it's a good deal. They're being told it's a good deal by perhaps unfortunately, an agent who may not have the experience necessary to conduct thorough evaluations. And, one of the key components in our software, and I think you'll appreciate this, is we don't just do a snapshot of your purchase. I don't know, what software do you use when you do your valuations? Do you use an Excel spreadsheet?
Yep.
Yeah, is it one that you built yourself?
Yep.
Okay, so that's different. But for a lot of people, when they're using software, they'll be using a software or even an Excel spreadsheet that only looks at the purchase. And so what we really want to do, though, is we want to look at the purchase, we want to break it down, and then we want to try and be able to forecast the optimization potential of the property. Because at the end of the day, buying an underperforming asset and holding it is not a very good investment. Even taking into account passive appreciation, oftentimes when we buy underperforming asset, we could be overpaying for it. And so there's already a loss in equity on purchase. So from a liquidity standpoint, you could be putting yourself in a very precarious position. And so what we want to do is look at that optimization, but then really evaluate the realistic probability of actually being able to execute on that optimization. And so, we will classify that as our stabilization period. And then we try and relatively accurately can forecast future value with the new market conditions to predict what your outcome is going to be. And so the iteration of the software I'm going to show you is our beta that's out on market. We have a new version coming out that we're working on. Actually, a great company in Vancouver is helping us with this. And it's actually going to be breaking it down through a relatively complicated mathematical equation to actually rate the property from start to finish. So it's pretty cool stuff.
That's absolutely awesome. I can't wait to see that demo of yours. When it comes to you working with clients, and I know lots of people out there who are jumping into real estate, there's that emotional aspect of it. And you were kind of alluded to it before by saying there might be a property deal out there and it looks like a potentially good deal, but it's overpriced, but then everybody else is bidding for it and then pushing that price higher and higher. Yet your client here is looking at it from your perspective and saying, I can't put a price on it, but everybody's putting stuff in. I might be missing out. I might be slow to the game.
FOMO.
How important is that patience for your client to just stick with it and wait for that one deal that nobody is actually like putting a whole bunch of offers on?
You know what? That is, I'm really glad you said that. Patience truly is a virtue. You know, failing to plan in this industry, I'm telling you right now, is plan to fail. You will lose your shirt. And, getting involved in that emotional mindset, or what I would call that irrational. I always say there's two types of buyers. You have your rational buyer and your irrational buyer. And getting into that irrational mindset is a killer in this industry. One bad purchase, especially if you're overpaying and you get into a position where you need to liquidate quickly, but you have no liquidity because you have no equity because you overpaid, it can ruin you. I've seen it ruin people time and time and time again. And so patience is really important. Undertaking, a thorough evaluation is really important because at the end of the day, we can predict with a reasonable degree of accuracy that property's value based on assumptions we make. And the assumptions aren't that hard to make, right? It's like if the building was built prior to 2018, we know is in Ontario, there's going to be rent control. We're not going to be able to increase the rent to what we need, perhaps, to hit our future value that we need. And where this really comes into play, like I'm dealing with some clients right now on larger portfolio purchases, and they they want to take advantage of the MLI Select program, which I'm sure you're probably aware of. So and so for the listeners out there, MLI Select will apply to a commercial multi-unit property, so 5 units and up. And it will look at a number of different components to the property. It will look at its efficiency, energy efficiency, its accessibility, and its affordability. And from there, it will be broken down and reviewed, and you will receive a point score to it. 100 points will push you into the realm of getting, the biggest benefit of the program, which could be a 50-year amortization. And I'm talking to these people now, and they're a relatively new fund. They're actually a syndication. They own a number of properties, and we've brought to them a portfolio to purchase, and their evaluation is solely being done on that 50-year amortization. So, best case scenario. And then we're trying to forecast. It was built. Part of the portfolio was built in 2015, so it's still under the rent guidelines, and they're trying to push future value on optimization to get a refinance in 5 years. But the problem is, if we see an increase in the bond rate, like the bond rate now, I think it's at 3.8 or 3.9.
Yeah.
And then you add in prime on that to get the rate you're going to get through CMHC that they're going to insure. But if we see a fluctuation in the bond rate, let's say in 4 or 5 years time, and it goes up by 1 or 2%, which, perhaps it might be unlikely, then we're looking at a pay down situation. And because we've done our evaluations over a 50-year amortization, we really have no wiggle room, and our pay down will be marginal. And so these are the types of things that, I try and, drill into my clients' heads, that we have to look at this thing in its totality, its best case and worst case scenarios. And, I don't know if you agree with that or not, but it's, at the end of the day, if you put yourself in a bad spot and, the bank comes calling for a pay down, you have a choice. You either pay it down or you have to sell the asset. So
yeah. And at the end of the day, that's why they're coming to you. You're the expert, you're the person who's able to guide them along and mitigate certain risks that they may be getting into, like having their emotions take charge and buying a property that 2 years down the line is not going to make them any money, kind of thing, right?
And
Especially
some clients don't listen. Sorry, go on.
Well, yeah, especially it's like those that don't listen, it's kind of hard to kind of drill that in their heads. So when people are a little bit difficult when it comes to following your lead, what's your best strategy? I know like you're trying to convince them, but if they're very hard-headed, what do you do?
You know what? I have a group of people I'm working with right now. So these are a smaller group, and there almost is no reasoning. And so what I like to do, so to give you a bit of a backstory, the goal is single family conversion with severance potential.
Mm-hmm.
And so what they look to do is intensify single family units so they can add in a second or a third unit, even a fourth unit in some cases, with severance potential to build another single family with multi-units inside, and then do a blanket commercial CMHC insured mortgage. And so the problem is a lot of the assets we've been looking at, things like severancing and knowing what you can build on that site oftentimes require some planning. We can't just automatically assume that we're going to get a severance. Oftentimes there could be minor variances required, even zoning bylaw amendments, all of which take time and money. And the problem is if we're simply forecasting based on the best possible outcome, I'm of the opinion there's usually a reasonable degree of probability that that's not going to happen. And it can be tough. With this particular group I'm working with right now, I'm on the fence of whether to continue the relationship or not, because at the end of the day, it's not about a commission for me. And, it's success. My client's success is really important because when they fail, I fail because I'm the one that they've retained to help them make really good decisions. And so when they don't look at me or listen to me, rather, oftentimes it can make me look bad as well. And a big part of what we do is in, maintaining our reputations and reputation management and conducting good business.
Mm.
And so it can be really challenging. And when push comes to shove, I will bring in experts. So I have a number of planners I work with, both at the city and privately. And oftentimes what I'll do is I'll bring in a third party who can provide a bit of insight. And I try to make sure that that insight is unbiased and based on fact. I find that's really important. And that's usually my option of last resort. But when I do that, I have a relatively good rate at which the clients will then listen, but it doesn't always work, and so it's tough.
Mm.
Emotional buying, getting caught up in that frenzy, it's tough, right? Because I mean, at the end of the day, what do most people want in life? I would think they want to do better or become a little bit more successful, or pick up that extra property that could provide them with a way to retire a little bit earlier, a nice little nest egg, right? And so people get caught up in the frenzy, and I think they get caught up in a lot of the, excuse my French, but a lot of the bullshit online, and a lot of that predatory behavior, where people are selling things that are promising you the ability to do that thing you want to do, but the realistic probability of doing it is slim to nil. And I see this often a lot, and with the let me teach you how to buy property with no money. And yes, it's a thing, right? I mean, I've done a lot of transactions where my down payment has been zero because of very creative financing. Again, there's always a requirement for some capital, whether it be land transfer, legals, all that kind of thing. So it's really never a true no money situation unless you're using other people's money, the OPM strategy, but I mean, can you imagine teaching someone who's brand new into real estate
Mhm.
how to leverage OPM and then go out and try and pull people in from their spheres when they really have no experience? And to me, that's predatory. That's almost criminal, right? Because you're taking advantage of somebody, and that is one thing that I never wanted to get into. And so part of the software too is so people can do their own evaluations and say, hey, this makes sense or no, it doesn't. I don't need an expert. And so that's that was a big push for us too. I think your reputation is one of the few things that no one can ever take from you. You can only ruin it yourself. And yeah, so that was one of our mottos when we got into this as well, and that's how I conduct myself today.
Very, very cool. Just out of curiosity, what scenario do you rather deal with? An investor who is quick to buy because emotional, or slow to buy because of fear?
Oh God, you know what? That's a really good question. I deal with both types. I'm not gonna lie, I do love my quick to act investors, but they're also relying on a lot of the work that we do. And so it's really rewarding when we can do that, and we can put together a really nice prospectus on a property and undertake thorough due diligence. I love it. And one of my best clients, I mean, he's bought hundreds of millions of dollars in property through us for one of his syndications, and it's been fantastic. But it's I know how he thinks. He understands the software. We can do the evaluations really quickly, and it's great because what's nice about it is I know I have a reasonable degree of probability to land that down, especially when we're in multiple offers. We can typically go in, relatively clean. We work with a lot of environmental agencies, with a lot of companies that do energy audits. So we can typically do a lot of what we have to do after purchase, or we can do some due diligence, verbally, without, dropping a lot of money on a property. I do appreciate the client who is very thorough. The problem is if you're overly thorough and you analyze a deal excessively, it can put you in a bad position because you're often left, I don't know if that, always, you're often left, holding something that it's worth nothing, you know what I mean? So it's like, I think there should be a blend to the two. I'm not sure. I don't know if you have I'd be curious to know what your opinion is on that.
I think when I asked that question, I was thinking more with regards to the people who are quick to buy tend to not want to listen to opinions much
Oh, I
because
see.
they
Yeah.
figure that they know everything, they're going to just do it anyways, and they're emotionally charged. Whereas the other group is, I need to make sure that everything's
Yeah.
fine-tuned and everything's detailed and all that kind of stuff, but they're too slow. Even if all the numbers make sense, they're
Mhm.
still fearful of putting down that down payment and signing
Yeah.
those papers. So in my scenario, I like working with those who are a little bit slower because I know they want to be thorough and I can
Mhm.
explain that through them. Whereas the other ones,
Yeah.
sometimes you could like throw it in their face and they're
Mm.
still not gonna listen to you. So
Yeah. It's like when the latter of the two are ready, they're ready and they're going to move forward
mm,
in full conviction. And I can appreciate that, and it depends on the market, right? Like, if you'd asked me this a year and a half ago, I would say, the client that overanalyzes isn't going to buy anything. And that was in fact the case. It's like I met with a lady yesterday and we were looking at a building and she's like, I like it, but I need 4 days to let this sit. That's my number. I don't know if it's like a bit of an OCD, but it's like I need 4 days.
mm.
After I've had 4 days to sit on it, I can make a decision, but I can't, I just my brain won't let me make a decision any sooner. And you know,
And by then it's
offer offers are going in like it's a holding offer situation, and so we're now in a position where the offers are going to be before her cooling off period, so to speak, right? And so that can sometimes be challenging. And and truthfully, I don't see a lot of holding offers right now. This is one particular property where we are offers are in fact being held, and that can, if we have to act before then, it can be a challenge. But again, it's very it's dependent on the person you're dealing with. Truthfully, at the end of the day, people hire us because they want to, buy something and build something and, improve their lives. And yeah, it can be a challenge, but it's a fun challenge too.
Mhm. And of course, the software that you're here to show off is something that makes that process a little bit easier. When the numbers make sense, the convincing and the emotional stuff kind of gets easier to deal with because the numbers don't lie, right? So let's jump into it. I can't wait to see it.
Sure.
Can
And
you
it's
can you create a scenario where, assuming the person who's coming up to you is brand new, they want to get into real estate, they want to do a investment. What's that process and how would you analyze it?
for sure. I need you to just let me screen share.
Go ahead.
Did that come up?
Yep.
Okay, can you see my cursor moving?
Yep.
Okay. So this is just the main section of the property where you can undertake your evaluations. A number of different types of evaluations you can do. I'm going to go through. So my developer is in the software right now. And so I'll just give you a bit of an example of kind of how we start the process. So I'll put in an address here. This is just one in Kingston. So I put in the address, and what we try and do is give them as much information right away as possible. And so we pull imaging right away. We pull a mapping system right away as well. So you can, you can look at the area where the property is located, look for, amenities, walk score, that kind of thing. So this is a triplex. So we can triplex downtown. You can name the unit if you want to, just so you can differentiate. So what we can do too is we can duplicate property, which is nice. And so if you want to run multiple different scenarios, you can do that as well. And when we originally created the software, we tried to combine it all into one, but it became very confusing. And so this is why you can name property. So I could name this, triplex downtown, 30-year AM, six, whatever I wanted to. So I could differentiate it from a different, if I want to do an evaluation a different way. What's cool here too is, we can do a straight burr, we can do a buy and hold, or we can do like a fix and flip or wholesale. For this, I'll do a burr, and then what it does, it's going to automatically create a property, and you're going to go into the main um, uh, the main body of the evaluation tool, and we're trying to keep it simple too. And so you can be as detailed or not. The most important thing is going to be the property address here, but then you can get into things like the year built, number of bedrooms, number of bathrooms. While this isn't important right now, it will be in our new version coming out because we're going to start breaking things down per square foot, per bedroom, per unit. So we can break down a unit costing a little bit more accurately from a comparison perspective. That's not required right now, but in the new versions that we have coming out, it will be. Additional information. Also, too, what we're building out, which I think is really cool, is currently the reports are, and I'll show them to you, they're all separate. So you have your initial purchase report, your improvement, what's the property like after you improve it, and then if you refinance it, how it looks. We're going to be combining that into one clean report that is going to break down the entire process, but we're also building in a pitch deck. So let's say you want to JV a deal, or you want to send it to somebody, you can actually send it by way of pitch deck and use the software to advertise the property for you. So it's kind of cool. Then from here, we would go right into the worksheet. I'm going to jump back into another evaluation I've done just because I know my developer is in the system right now, and I just want to make sure that everything's going to be populating correctly. So here's the same property. And so the system is going to do it, and I'm going to take a bit of time here just to walk through it. So we've set up the system so it makes a number of assumptions. However, you don't have to use the assumptions. So one thing we do is we set the down payment to 20% automatically. We set the interest rate to 6%, and we set the amortization to 30. You can change all that. It's totally, you can manipulate it, but we've set to default. So, currently I find this setup works really well for me, 20% down, assuming even if it's going to be a CMHC product, I can still run it this way, and I can change it later. We've actually built out a calculation so we can calculate CMHC fees for you as well. If you're in another country, so depending on the address you put into the system, there are certain features that won't pop up. If you're in the US, like you have no reason to have a CMHC premium function. It doesn't make any sense. So that wouldn't come up. Right. If you have a second mortgage on the property, or you will need a vendor take back, we can analyze that as many as we could do 2, 3, 4, whatever it is. I mean, ideally that would be unreasonable, but let's say you have a second and third financing on the property, we can calculate that as well. Cash required to close. We set things like building inspection, appraisal, and legal fees. We keep those standard, but they can all be modified. And truthfully, you're dealing with a big building, you're going to be paying a lot more than $2,500 in legal fees. What we're working on now is a land transfer tax integration. So it will start calculating your land transfer taxes for you automatically. Currently, we don't have that ability, but it is coming. So, right now you have to put that in. If there are things you don't want, you can delete them, and you can even add in other closing costs that you think may be appropriate. So again, we try to make it as customizable as possible. Rent income. So this is kind of cool. We've done this so if you want to do a really quick evaluation, you can just put in like a gross total. You don't need to break it down individually. I always like to break them down individually, even if I'm doing, trying to do a relatively quick evaluation, because I like to see the rent roll. And so we actually build out a rent roll in the software. Rent rolls are very important, and I don't need to explain this to you. I know you're aware of this, but just for the people listening, a rent roll can really give you a sneak peek into the property, even more so than looking at the operating statements. So the rent roll will let you know where the property sits, how long the tenants have been in place for, what the potential lift could be in each unit. Those things are really important to know because we're going to be using the rent roll to help forecast future value. And so I always like to do it this way myself. Again, you don't have to. We've designed it so you can get really critical. A lot of our users won't use this. But I do. I find it very handy where we can break down number of bedrooms, bathrooms, square footage. We can even break down information related to the tenant or if the unit is occupied. So this is cool because it will show up in the rent roll if you have it listed as vacant. Automatically calculate your vacancy. I set it at 2%, but you can set it, it's depends on the market you're in, right? So, if you're downtown Toronto, you're probably going to be, you might put 1% in there, but realistically, it's probably 0, although I never recommend putting 0 in. Other income, again, if you have parking, laundry, storage, you can add in other income, really just depends on your needs. And then our expenses. I just did this just for some quick numbers, but I don't like looking at, this is one of my pet peeves, is looking at an expense an operating statement where it has round numbers. I don't know about you, but when I see $2,000 for insurance or $5,000 for property taxes, I make an assumption that the person who prepared the document wasn't being as thorough as possible. And so that's something I always look out for personally when I'm looking at an income and expense statement. For the purposes of the software, I'm going to leave it as it is right now. Repairs and maintenance automatically calculate for you. Again, you can change those numbers. It really depends on what you want. Heat, hydro, let's say the heat is, $165 a month. Hydro is $132 a month. And let's say the water is $115 a month, just whatever. You can put anything in there. You can add as many expenses as you want. And then what we try and see really quickly, do we have any cash flow? We've also built in the ability for the system to do an analysis on what the system thinks your property is worth. And so this, I think, is really cool. Depending on your property, if you are buying, a 5-unit, a 10-unit, a 20-unit, we're probably going to be using an income approach, right? I would say, every appraiser is going to have a list of recent solds, and they use a cap rate as an indicator to help guide building value. And so, or you could use, if you're dealing with a triplex or a duplex, or you might use a direct comparison approach. It really just depends. In this instance, just to show you the software, I'm going to use the cap rate approach, although I probably wouldn't doing an evaluation on this property. The cap rate would come into play, but it wouldn't be as important, because this is going to be a mortgage that I'm going to have to guarantee myself based on my merits and the income on the property. Long-term assumptions. So we can make assumptions related to the appreciation of the property, the income, and the expenses. They're pre-populated. So this is the pre-population. So 3% for appreciation, 2% for expenses, and 1.5% for income increase. Again, you can change this to whatever you want. And then we just built in a sale costing. So you can we can forecast your exit depending on where you are in your journey. And so we forecast our sale at 6%. And then what you get is there's a number of criteria you get. So cash needed, cash flow, cap rate, total ROI. I'm not going to get into detail about this because it would require more explanation, but we do have a criteria section here where you can set criteria to every stage of your journey. So on your purchase, let's say you have a certain amount of money available to you. We can set our limits on your cash requirement. We can set limits on what your ROI needs to be on purchase, on what your cap rate needs to be on, your expenses versus gross income. So the 50% rule, the 1% rule. So we can build all those in so you can use those, or you don't have to. It's totally up to you. But what we get hit with here, is just some preliminary information on, your purchase price, the down payment needed, the cap rate on purchase, and cash flow. Those things are relatively important. For me, one of the big things I look for are going to be the investment metrics here. So, what's my recapture, appreciation, and cash on cash? I like to see it above 20% on purchase. And then, your net operating income. Debt coverage ratio is always a big one I look at, not for these smaller properties, but when we get into the big property, I always look at debt coverage ratios. We do a lot of funding with, that would be insured through CMHC. And so that is a really, really important metric. A lot of our US clients, 1.25 is the number. And if they're not seeing that, they know they're going to require a larger down payment than what they're forecasting. And so these are little tips and tricks people can use so they don't waste time. They don't offer on a property, they're overpaying for it, knowing that there's really no probability of purchasing it because there's going to be an additional ask required by the lender on closing. So again, little things we use. The system likes to populate a bit of a warning. So if you were overpaying, it would give you what the system determines the estimate of the property value to be. And then if you're overpaying or underpaying, why we do this is because we like to base, and I'll show you here, we like to base our equity on what the system believes the true value to be. And we do this so we can measure liquidity. And if we get into a position where we've overpaid by $100,000, and our down payment requirement was, let's say $200,000 for simple math, somebody buying the building might think they have $200,000 in equity when in fact they may only have 100. And so that's why we do this like this, so we can actually forecast what the system believes to be the true value. However, you don't have to use that. So in that, you can go back to the previous page and you can turn off the function to allow this. This is simply just another tool we use to help investors try and make an informed decision. We can look at things, we can break things down a bit more critically. We can get into some of the key metrics. If you're a numbers guy, you would probably love this. You can skim through for, as long as you want. And so just ways that we can get an idea. We can look at our total profits after so many years. And then from here, you can say, listen, you know what? I want to improve the building. We can go to our rehab component. This is what I think makes the software really unique, is that we can look at the original income, and then we can forecast what we think the potential value could be if we improved. So this particular property is in a student area. We know we're looking at a 2 to 3 year maximum. They're all students. And then so we see a relatively high turnover rate. And so in this example, just to show the software, I'll turn these all off. So what we can do is we can say, well, we know in, let's say, 2 years' time, we're going to turn over the entire building and re-rent for what we believe the true value to be. And so we can rehab the unit. We can identify the cost to rehab if there is one. We can identify a tenant buyout if there is one. And then we can identify the length at which we think it's going to take to undertake the improvements after the tenant leaves. And why we do that is so we can actually analyze your true carrying cost. And so when we actually look at it in its totality, we know within a reasonable degree of accuracy, assuming that you can hit the projections on where you're going to be from a cash position. And so, we can do these for all of them. I can say, maybe, yeah, so we're going to rehab all the units. I've already gone in and put in the information on unit rehab costs, tenant buyouts, just to try and streamline things. From an other income perspective, we're going to add parking to the new tenants coming in. And, maybe we're going to install a coin laundry machine in the foyer. Okay, $25 a month, whatever you want to do. The operating expenses will automatically change based on the new gross income. So your repairs and maintenance, anything related above and beyond that, let's say you may have to put in, we're going to add in a coin operated laundry. Well, maybe it's going to be a gas powered unit. Our hydro might go up to $200 a month. Mm-hmm. And you know what? Maybe we're going to see an increase in water consumption. Okay. So we can track those things. We're going to see our new cash flow, our new debt coverage ratio, and our new net income. And this section here is cool. This is where we can actually determine our stabilization period. And I'll show you why that's important in a minute. And then all of the costs that we built into the unit rehab will pre-populate here. And then you can add in any additions, like let's say you got to put on a new roof or you have landscaping, whatever you might be able to do, we can break it down here. Something we really like is we can also finance the rehab costs. So if you want to use a line of credit to do your rehab, or you're using a credit card, or that might be unreasonable, but let's say you're using a line of credit, we can actually finance that cost. And if it's going to be paid out on refinance, what the interest rate's going to be, and if it's going to be interest only, and how long that loan is going to go for. So for this example, I'm just going to close that off. But and this is the stuff that we pride ourselves on. And so this was actually a request from a number of different users from all over who said, listen, we love it, but it would be great if we could actually forecast our improvement cost and measure it as borrowed funds. And so that's why we've done it. You can really get critical into your carrying cost if you want to. The system leaves a lot of this stuff collapsed. It's more of an advanced feature. And so we've tried to make the system simple enough that anybody can use it. And if they really want to dive into the system and take full advantage of it, they can do it, on their own. We don't want to overcomplicate things. And then what we can do is we can try and identify the new future value. So in this situation, we can propose a new cap rate. We can manually enter an ARV if we have really good comparables in the area. It just depends on what you want to do. And the system, so I'll use cap rate in this scenario because I used it in the first one. And then we can pre-populate a target value. And then the system's going to show us what our new metrics look like. So now that we've bought the property, we've improved it, how are my numbers looking? And, here they actually look pretty good. So, we see our passive appreciation, our recapture, and our cash on cash. The numbers are relatively stable. We see we now add forced appreciation into the mix, so we can see how much that we've improved the value based on the money we've put in, and we can determine our new ROI on completion of our stabilization. Look at our cash flow, our new value increase. So we've seen a 50% value increase on purchase. And then, we look at our new debt coverage ratios. And again, all this is going to be changing. Before we leave here, I'm going to show you what the new version is going to look like. It's really cool. And then we can break down, things like your value summary, your equity, all of your purchase information, your investment criteria, what you spent money on, closing costs. And this is where we can break down your net income because you've had an injection of capital here. But this is where we can actually look at things. So you can see here, we see our stabilization period. And then we modify our new post-rehab year one. And this is what we're taking our new ROI from. And so again, we're trying to paint that picture. Oftentimes, any software that looks at any type of forced appreciation, it bundles everything together in year one, when realistically, that's not usually possible. And so we've tried to do it so you can make your stabilization 10 years if you want. But the point is, when you're pitching a property to a client, when you're pitching it to a seller, when you're pitching it to an investor, you want to show them what they can attain within a reasonable degree of accuracy and confidence, and how long it's going to take as well. It's always a question my clients ask. If I buy this, when do I get to realize the value? And so this is when the software really becomes handy. And then we can get right into the refinance. And so we can say, and again, this doesn't have to be used. You can stop at the rehab page or the optimization page and say, you know what, I'm just going to leave my money into the property and I'm fine with it. You don't always have to analyze the refinance. So this is the nice thing about the system is you can do as much or as little as you want. But in this situation, let's say we're going to do a 75% loan to value. It's going to be 2 years' time. We're hoping the interest rate's going to pull back to 5%. We'll do another 30-year AM. I love my 30-year AMs. I think we're going to see those extend, by the way. And then we can also calculate in any refinancing cost that might be attributed to the refinance. So appraisals, closing costs, legal fees, lender fees, whatever. And then we get another summary page. And so why I like this is because I'm able to track my ROI from purchase to improvement to rehab. And what we see here is, not including forced appreciation, we're looking at almost a 70% ROI. We see here that the system tells us that you've refinanced, you've pulled out 200 grand, but in this particular situation, you left in 60. So to me, that's still relatively reasonable. Your total cash invested, you have almost $200,000 in equity above and beyond your cash out, and we see nice steady cash flow. And a debt coverage ratio that's 1.2, which in my books is reasonable. And so this, I think, is super valuable for people so they can really look at the journey from start to finish. And we have some other cool features too, like I can share this. So I can share this link. I can do a link and I can share it to my social media sites. I can hide the address, or I can make the address visible, depending. I can make a public link. The nice thing of this is you can revoke access. And so what I can do here is, if you're my client or you're sending this to one of your clients, you can send it to them directly. And then what's nice is I can actually tell if they've opened up a property. So I can go in and here's one. So I see this guy has opened this property 19 times. So I know he's viewed my link. And not only that, he's imported it. So another feature we have that I haven't seen anywhere else is you can actually import the raw data right into your own system, so you don't have to upload it. So you can then take it and you can upload the system from there. So it's a great collaboration feature, which has probably been one of the best things about the software is I can now send it to a mortgage broker mortgage brokers love this stuff because they can just download all of my raw data and they can say, you know what, I think I'm going to tweak the expenses. If it's going to be a CMHC deal, I'm going to add in 1% for wages. I'm going to add in an appliance fee. You know what, your maintenance is a bit low, and I'm going to increase your maintenance to $880 per unit, whatever it might be. And so they can just make those corrections immediately and then send the file back to you. And so that is, in my opinion, something that's going to is changing the way people do their valuations. Because oftentimes, I'll send a deal to a broker and he's like, oh man, I got to input all this data. It's going to take me 3 hours. Like, and then he does it and he's like, it doesn't work. Like I just wasted 3 hours of my time. And so it's a time saver as well.
Mhm. That's very, very cool. I like the fact that you can plan out years and years of rehab and appreciation and all that kind of stuff, and
Yeah.
and you're not guessing anymore because lots of investors out there
Yeah.
is, oh shoot, I need to do a renovation now, and then you go and scramble, do the
Yes.
renovations, and then like, oh, when is this property ever gonna make money? And they're waiting, and eventually they might just go, okay, whatever, I'm gonna give it up,
Yeah.
only to know that a year later it's going to start making more money, maybe, right? So
Yes.
this actually simplifies all that process, and but it requires a lot of planning at the beginning. So as you know, there's that whole garbage in, garbage out.
Hmm.
For somebody who's not savvy with software or all these terms and all these inputs, what do you do for them? Like, can they call in? Is there tutorials? Is there stuff like a
Yeah.
walkthrough
So
that they can do?
what I'm going to show you right now, let's see if I can, sorry, I have this little banner that's popping up in my way here. Let me move it to the bottom of the screen. Need to figure out how to share this page with you here. Let me see if I can share, just change my page. Hmm. Yeah, it's funny. I build software, but I can't figure out how to. Oh, there we go. Okay, hold on a second. Okay, so I'm going to share a different page with you. Can you see this?
Yeah.
Okay, so this is the new iteration we're working on for our UX UI. So we're trying to take it and make it even simpler to use. While this might not show a lot right now, we're trying to just condense the information so it's a bit smoother in how you undertake your valuations. And so we can break down the reporting systems from your purchase to your rehab to your BRR, um, different way on how we break down the information. I'm trying to show you another page here. Where is it? Oh, that's not it. Okay, can you see this page now? I just changed pages.
Yep.
So this is the new dashboard system. So we're building in an educational portal here.
Oh
So
wow.
what happens is when you first log in, so this is going to be on the new version coming out probably 3 months.
Mhm.
It's going to walk you through in a video tutorial, and every section you go to will have the ability to click a little video, and you can watch, in 30 seconds or less, how you're supposed to use the software for that particular section. And so this is what we're building right now.
Very,
So
very
currently,
cool.
what we do is, I do weekly online meetings. I have people will join from all over the place, and we'll pick somebody's property and we'll work through it, and then we'll do a question and answer period.
Mhm.
Yeah.
Wow.
So again, just for realtors who may be like, I'm not using this to solicit clients. It's
Mhm.
simply meant to educate. And so we can help inform people because, you do bring up a good point. It can be, it can be daunting at times, and there is a component of, education that you have to do yourself, but we've tried to set it up so it flows reasonably well.
Mhm.
And that's the point. That's why we've partnered with this company in Vancouver to rebuild the user interface so it's really seamless and relatively painless. But there's always a little bit of pain sometimes when you do these things.
I can see how this could be a big benefit to a lot of realtors out there who's working with their clients, and it's a great tool for them to go, hey, here's the inputs. What do you think? What do we need to
Yeah.
change? And you can always collaborate, as you say, with other people, like the mortgage broker, even your contractors and all that kind of stuff. Have that plan in place so that you're not second guessing when you're
Yeah.
putting in that offer and whatnot. So this is very, very incredible. So what's the next step for people? Like, for instance, they really want this and they want to get to know you a little bit more. What's the best way?
Yeah, so the best thing they can do is they can go online, they can create a free account. So the account is free for 30 days. We are bringing in free components to the account, which will be lifetime free. But what they can do is currently they can log in, they can create an account, they can there is my calendar is actually built right into the website, so they can just do a one-on-one with me for 30 minutes, and I will go through the software with them as well. And so we're doing that again as a founder. Those are things you have to do. It's truthfully not sustainable, but we're getting it to a point. Once we get the new version launched with the educational videos, we're not going to be doing the personal one-on-ones. But yeah, people can go, they can log in. As soon as they create an account, I'll probably be reaching out to them to introduce myself. That well, we do like to add a personal touch right now, and that's how they get started. Yeah.
And I think that's a great thing for people to get to know the founder of it, the person that came up with the whole thing and putting it all together. And sometimes that's missing when you're using another program or another group of people because
Yeah.
they don't have that connection with the person who actually put that whole thing together. Whereas in this case, they get you at
Yeah,
this
yeah.
stage at least.
And it's funny, I've tried to reach out to other software programs years ago just to, like, listen, I use your product. This is the type of real estate I do, and they don't really have the time for you. For me, I would say probably 50% of the features you see now, and there's a whole bunch that are being brought in with the new software. They were all recommendations from users. And so, I without user feedback, I don't have anything that's of any value. And so that feedback to me is incredibly important because if I can tailor the software to people so they don't have to try and do napkin math, right? Where they're going to write it out on a piece of paper, they're going to use part of an Excel spreadsheet and another part of something else. If I can, take that input, and if it's going to be advantageous to the majority of users, I mean, we implement it and we work really quickly. I mean, some of these features that we can bring out in weeks, it's like that sharing feature took about a month to build. But it's been the most popular component of the software is that sharing feature. People love it. And just because it's a huge, huge time saver. And that was a recommendation. Hey, you know what? I use the software now. It doesn't do what I need. If I share it, it's done in a PDF, which is useless. I need to be able to share it and then have someone continue collaborating. And so that was all user feedback. And so we listen to that. Like I encourage it. Like if you don't like something, tell me. If something doesn't make sense, hey, I'll try and make it easier. And that's part of the new UI UX is going to be making it even easier to use and understand because we don't want it to be overwhelming. If it's overwhelming, people won't use it. And so it needs to be simple enough that a beginner can use it, but comprehensive enough that, some of our bigger clients can use it and find value in it as well. We don't want to limit ourselves to who we can appeal to, right? And like I told you, like I do portfolio evaluations on this thing and it works really well. So it's yeah.
That's also what's also really cool is the fact that it goes across countries. Different countries, you can still use it. You could actually be an investor at home doing a property across the world and it
Yeah.
still works and you could collaborate and share and all that kind of stuff, which really simplifies everything because lots of people are afraid to invest elsewhere because they're not there. But
Yeah.
with this, you could send you could share the portfolio over, have people update numbers and all that kind of stuff,
Yeah.
and you still invest in that. So that's really, really cool.
It's funny. I have a lady, she's in California, but she's shopping in Florida. And she'd come to one of my webinars, a really nice lady, very new to real estate. And she was part of a group that was giving her some pretty bad advice. So she actually books, and I'm not, suggesting this, but she books one-on-ones with me every week. So it's kind of like that wasn't the intention of, but so now I spend time and we're doing deal valuations in Texas, in Florida, in California, and she'll analyze 5 deals. She'll set up her meeting with me and we'll go through all 5 in 30 minutes and we'll pick up the good ones and the bad ones really quickly. And it's been 4 weeks now and I'm not a coach. Like I'm not trying to coach anybody, but it's her real estate IQ and her acumen for deal valuations. I mean, it's shocking. She's now a pro in the system. And this is after, she's probably analyzed 50 or 60 deals. And so she can go through the system almost from beginner knowledge. I mean, I wouldn't say she's advanced now, but a lot of the terminology and the way that she's looking at properties would be a more intermediate or an advanced perspective. And I find that fascinating. It's like literally in 4 weeks.
Wow.
And it's just, well, one, it's consistency, right? So you're doing something repetitively, you're getting feedback on it to improve what you're doing. But even from a consistency standpoint too, Fong, like, you look at some of the things that we see where people are, the FOMO, fear of missing out, and they're overpaying. That's because there's no consistency in the way we undertake our valuations.
Mhm.
And so I'm not going to say that this software is going to cool the real estate market globally here, but for good investors, it's going to help them not make those bad decisions. And if more people use software like this, especially realtors, like I can take an evaluation and I can upload it right to realtor.ca. And so when you go to one of my listings and you click on the media package, you go right to my shared link. And so you see the
Wow.
evaluation done right there. And you can go through the purchase, the improvement, and the rehab. And so, it's kind of leveling the playing field. And, realtors and sellers should be doing this too, because it helps them advocate for their value. And, I think it can stop some of this overinflated spending we see in the market. Again, it would require a mass adoption, but
Yep.
if everybody is consistent in how they undertake evaluations and we all do things the same way, then it makes it a lot easier for that to become attainable.
Awesome. I see that this is an awesome, a really good tool for people thinking about real estate.
Oh
They can
yeah.
play with the program for, let's say, 4 weeks, become an expert, and then start engaging with a realtor and other investors
Yes.
in liking a property at for real. They could play with it now, kind of thing, which
Like
is kind
training,
of
you're 100% right. I'm glad you said that too. There are people I've worked with for years who've never bought anything,
cool. Mhm.
and it's like, for me, it's just, I know I do it because I've known them for so long now, but they simply undertake evaluations. And it's funny, I will get clients sending me things saying, oh, this isn't for me, but have you seen this property? And they'll send me a shared link on my own software and I'll end up selling it to another client. Like they don't even want to buy it. It's just like, hey, you might want to take a look at this. It's kind of funny. Yeah. Yeah.
Wow. That's very, very cool.
Yeah.
Our time has gone by very, very fast. The stuff that you showed was very fascinating, and I'm sure a lot of people will appreciate it. Um, Before I do let you go, though, I do have some quick rapid fire stuff. I had a whole bunch of other questions I wanted to
No
ask you.
worries.
Your
Yeah.
your demo was absolutely amazing. So rapid fire, quick things. Give me the first thing that comes to mind. You're stranded on a deserted island. One food to eat for the rest of your life. No consequence.
One food on a desert island. Oh, I'm pretty health conscious, man. I'd probably eat coconuts. I know it's terrible, but yeah.
Hollywood calls and goes, "Hey Jordan, we love this story. Your journey is amazing. You're creating this amazing software. We see a great biopic on you. Who would you cast to play you?"
Eric Bana.
You had that in your head right away.
Dude, you know what? I've had a couple people again. I've had a couple. So you look just like Eric Bana. I'm like, who's Eric Bana? I finally Googled it, and it's like it's stuck in my head now.
Awesome.
Yeah.
Well, Eric shows up at your door and goes, "I got the part. Let's hang out. Let's get to know each other." And you go, "Eric, buddy, no problem. I got the whole night planned out. We're gonna have some fun." So, what does that night look like to you?
Oh man, you know what? I have not been out in a long time. I would probably say let's take a rip down to Montreal. Montreal's a fun city. I haven't been there in years, but I would say Montreal. Maybe a nice dinner, go for some drinks, a nice club. That'd be a good time.
Awesome. Let's say you drive to Montreal. It's a long drive, and it's you only have one song to listen to.
Oh my God. I
What's
don't know.
that one song you don't mind listening to and it won't get annoying to you?
Oh, I'd have to look at my phone. You know what? I don't know the names of any songs. I have a Spotify playlist that I just kind of go through. I have to look at that though,
You can
brother.
feel free to sing a verse if you like.
Oh, you definitely don't want me singing. I do not have a singing voice. I'm big into I like a lot of EDM, if you can believe it.
Mm, very
So
cool.
not necessarily things you can sing.
Awesome. Give me a number from 1 to 6.
Or
1, 2, 3, 4. So I've yet to relate success to gift cards. How will you use gift cards as a metaphor for success?
oh, you know what? It would probably have to do with showing your appreciation for something by giving something back to somebody else. I do use gift cards for work all the time. I find a lot of the clientele I deal with, they don't appreciate gift baskets or they like money. And I find gift cards is often, if I do a deal, I typically give people a whack load of gift cards. It's just a token of your appreciation. So that's how I would probably say that, just to to repay someone working with you.
I see that. Thank you very much for your time, and thank you very much for the demo. It's absolutely amazing. Any final words that you want to share, or any other information that you want to share?
Nothing I can think of. Well, actually, no, that's not true. So we're going to be in Vancouver next week. We're at a big investor conference where we're actually pitching our software, which is going to be a lot of fun. And we will be at the multi-family conference at the end of the month as well. We're going to have a booth there. So if people are there, stop by and say hi. We'd love to see them.
Very, very cool. Awesome. Thank you very much.
All right, my friend.
Pardon?
Oh, sorry. Go on.
I said, thank you very much. And so everybody make sure you connect with Jordan if you're a real estate investor, if you're somebody who's thinking about real estate. Obviously, this software is something that's created just for you because it makes things so much easier, makes you have the right tools to use and also come up with the right numbers, make the right assumptions, make sure it's profitable because all that stuff is important when it comes to real estate investing because that's where lots of people fail when it comes to investing. So make sure you connect with Jordan. And yeah, until next time, he's Jordan. My name is Fong. Today is the day to unlock your peak potential. We'll see you later.